Here we go. Stocks bad, the numbers. Welcome back. Really quick update here on PayPal Holdings. Ticker symbol PYPL listed here on the NASDAQ. I'm sure everyone's familiar with PayPal. This was a stock that we watched. In the numbers, in my opinion, looked pretty healthy. Even when they were coming out with some decent earnings reports here, you can see very slight miss on the revenue, beating on the EPS. They continue to bring the stock down into this long-term descending wedge, even with the company even beating earnings mixed in there as well, and it just didn't seem to matter. It was a stock almost similar to SoFi, right? They're in kind of the same space, and we saw the same thing happen with SoFi recently. Stock was beaten down all the way down to 6, the low 6s, hitting new lows. No one wanted to touch it, and now boom, it's on the up and up, and everyone's talking about it, wishing they got in. Of course, the whole time it was in that long-term descending wedge, dropping down to new lows. Your boy here was doing updates on the channel saying, in my opinion, I like it down there at those levels. If I had some cash, I'd be a buyer. And now, boom, it's breaking out. And we're seeing exactly the same thing with PayPal. Stock came all the way down here, low 50s, gets beaten up into the 60s, the 50s. No one knows what's going on. What do I always say? In my opinion, follow the money, follow the revenue. We were looking at not only a company that could be viewed as significantly undervalued now in the fundamentals, but also in the technicals. We had this gap down going all the way back to the beginning of 22. We gapped down from 150, what was this? 152.08, I believe, is the low right there. So we gapped down, and I said, in my opinion, I said you're going to stay in this wedge, and then you're going to see the U-turn recovery, and you're going to go right back up there. So in my opinion, obviously, I'm maintaining my analysis as the stock hit a new 52-week high today of 90.27, was all you can eat down in the 60s and 50s. Stock now hitting 90. And in my opinion, it's probably going to keep going. And there's a one-year chart. So we see our top fib level just a couple of cents below 94. And if we switch over here to stock charts, we can see that the RSI has come back up, but it's 64.4, so we can technically keep climbing. You can see we had a slight retest here about a month ago on the 50-day, bounced off it nicely, and since breaking out of that long-term descending wedge, the stock has been not only above the 50-day moving average, but also bouncing pretty significantly well, reclaiming that mid-Bollinger Band level. Look at the multiple bounces there, even on the flash crash, and then boom, coming right back up a couple of days later. Coming down right to the mid-Bollinger Band, bouncing up. Right back down, bouncing up. So, in my opinion, it looks like it's on the up and up. MACD technically just crossed to the upside here on this big move the other day. So that's why we could potentially take that next leg higher into like the low to mid-90s before we kind of quote-unquote top out finally, and then maybe start to sell off and pull back a little bit. But you can see, again, slow and steady wins the race. We have our 200-day moving average flat throughout the months, and now, boom, curling upward, almost $69. Our 50-day following with the stock, and now, boom, pumping up as of late over the last couple of months. 50-day moving average, 82.29. So, again, you can have a potential little pullback, little retest, and then bounce. But in my opinion, I still like it. The gap fill, the numbers, and that's why, again, I was saying, even conservatively, just rebounding that long U-turn recovery going back to that gap, you're looking at, about $150 stock. So that's why, in my opinion, I like it. You can see the top Bollinger Band on the weekly, also a touch over 93 here at 93.19. So that's why that may be the next level you get to, right? The low 93s, maybe like the very low 94s, and then that's where I think the pullback is going to start to happen. But you can see the MACD was relatively flat for most of the year, as a lot of people were scared out of the situation, and they didn't understand how a brand name company like this could just keep dropping down. Is PayPal done? Do they have too much competition? No. You utilize the Buffett method. You watch a brand name company, you see how they're reporting. Technically, the crap didn't hit the fan at the company, and we mentioned even throughout this wedge that they were beating earnings more times than not, coming in above estimates. So what do? You find a brand name company like PayPal, let Wall Street beat them up, bring them down, sell them off. You buy them at a discount or even quote-unquote fair value, and then you ride the wave and you ride the rebound train. And again, stock hitting new highs. So anyone who caught my videos in the past and kind of saw what I saw, and you jumped in down in the 70s, 60s, 50s, obviously you are sitting pretty right now. weekly RSI up at 73.5. So on the longer time frame, again, we've basically been surging since like August. So technically only had like 2 red weeks mixed in there. So that's why we can technically keep going on the daily RSI, but if it does start to pull back and sell off, I wouldn't be too surprised. But again, I was saying this whole time, in my opinion, this is an overreaction. And that's why on the rebound now, even trying to look at something like an RSI, even if this runs up to 80, 83, you can't really say it's an overreaction to the upside either, because this pullback was too much. It was too much, which is why, again, in my opinion, I was pretty confident in PayPal. But we can see market cap now up to 89.25 billion. We're trading 21 1/3 times earnings. Could still be viewed as undervalued in this market. EPS has been steady, beating estimates 3 of the last 4 quarters. Revenue holding steady in the high 7 billion mark, 774, 786, 786. Profit margin, of course, is not the highest it's been, but it's still holding that low teen range here, 14.33%, almost about 13%. And of course, annually, we're technically still growing our business, almost 30 billion in revenue with profits of about 14.33% for 2023. So if we add those up, just those numbers, just the revenue and the income off of the revenue, you're looking at what, 33, almost 34 billion. And we can see the market cap right now about 89 billion. So we're trading, what is that, about 2.5 times annual revenue. Of course, I'm recording, so there's a fire truck going by. But we're talking about about 2.5 times annual revenue, which again, in this market, technically really isn't overvalued in my opinion. Total equity kind of maintaining that 20 billion mark. Our debt of 13 billion. The debt jumped up to 13.26 billion. Free cash flow this time last year, 1.1 billion. For last quarter, 1.45 billion. This time last year had 6.8 billion in cash. Now we have 7.27 billion in cash. So again, if we look at it, our quote-unquote fair value, we have assets outweighing liabilities in both the short and the long term. If we subtract the debt from the cash, we're looking at negative 6 billion. But if we look at the revenue and the profits, that was what? Positive 33 billion. So that brings us up to positive 27 billion. Plus the 20 billion in equity brings us to 47 billion, in my opinion, quote unquote, fair value for this business. So even if we continue to tick up a little bit more, hit slightly new highs, and then do have the pullback around 93, 94, that would basically be right around 2x, quote unquote, fair value. 47 billion times 2, 94 billion. Right? 94 billion. So in my opinion, you could potentially see like another 5 to 7% run up here in PayPal. Over the long term, I think it keeps going. But again, over the short term, you may see a run up to whatever, 93, 94, 95 billion valuation, and then the pullback starts to happen. But we could also see our book value per share has slowly been inching up from the high 17s into the 18s, high 19s, as of last quarter, 2005. So according to book value, we're trading about 4.5 times book. And again, any way you slice it, the only argument you could really give me against PayPal is saying that potentially now at these levels, it's quote unquote fair valued. And I would appreciate that viewpoint. But I still think that, again, it's a brand name in the space. It's climbing up. I think people are kind of getting excited about the financial space again because, as we mentioned before, with SoFi breaking up and out, consistently hitting highs, I feel like people feel that the economy is going to get even more resilient. It's going to grow at even a better, stronger rate. And people are pretty confident that Trump is going to keep inflation in check and try to bring rates back down. So that's why Wall Street is kind of reacting positively to a lot of these financial stocks, SoFi, PayPal, and whatnot. But again, it really isn't rocket science, man. And I know, like we say, we all want to time it perfectly and catch the bottom and buy a call and just make, 2,000% returns off of a handful of dollars. Believe me, I understand how you feel. But if you can understand what's going to happen over the long term, then again, nothing is guaranteed. But in my opinion, something like a PayPal getting beaten up and scooping up shares when no one wants them, kind of hoping for that, not really hoping, just waiting for that inevitable rebound. In my opinion, that was the closest thing to a quote unquote guarantee that you can find. And that's why, again, I always keep an eye on, I know they're old school companies, but whatever they might be, Philip Morris, US Steel, IBM, it really doesn't matter. Verizon, right? I always keep an eye on a lot of these brand name stocks. And then as they're selling off and people start jumping ship and people don't understand why the stock isn't moving or why the stock keeps hitting lows, usually 8 out of 10, 9 out of 10 times, that's usually when you start buying. And that's why even something like SoFi, perfect example, as it started to pop out of the wedge, what'd you start to see in here? Everyone and their brother coming out with a video, typing in their little trading Discord. Oh, I knew to buy it. I didn't buy it. I was going to buy it, but I didn't buy it. Well, in my eyes, I knew to buy it. End of story, right? Stock went from 6 to 14. Same thing with PayPal. The whole time we were looking at it doing updates, I was saying these earnings don't look too bad. You know, the numbers overall look good. In my opinion, here at, 66, I'd be a buyer. Here at 57, I'd be a buyer. New lows, doesn't matter. I'd be a buyer. And now, boom. And that's the way the cookie crumbles. But in my opinion, I think it continues to rebound. And we fill that gap. And we recently had earnings 5 weeks ago. Slight miss on the revenue. And now we flipped the script and beat on the EPS side. Coming off a nice quarter before that. And again, a slight miss on the EPS. But the revenue, for the most part, has been strong here. Breaking above $8 billion for that quarter. And we can see next quarter due out roughly during the first week of February. Expecting over $8.28 billion in revenue on $1.11 roughly per share. So we'll see how that turns out. But in my opinion, I think the Trump administration will benefit a stock like PayPal. And also, because it came down so much, and you can see the stock was worth several $100s a share before it began this big sell-off. So that's why if Wall Street institutions and big smart money see the value that could potentially come over the long term, that big rebound, then in my opinion, PayPal may also benefit from the January effect inside of about the next 4 weeks after the ball drops. And obviously fund managers and big money reposition themselves. They look at what was not performing, what could be viewed as undervalued, and that's where they'll potentially move the assets to, driving the stock price up off of that big volume and positive headlines coming in. But that's pretty much it, so I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comment section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel, and of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.